Gold prices in India may reclaim Rs1 Lakh by December 2025. Report Gold Rate Prediction 2025. Gold has given robust returns this year amid geopolitical tensions and the tariff war. The price rise trend in India is likely to continue in the second half of the year 2025, and the rate is likely to reclaim the psychological mark of Rs 1,00,000. According to ICICI Bank Global Markets. Local gold prices are expected to continue trading with an upside bias, moving from a near-term range of 96,500 rupees to 98,500 rupees per 10 grams to 98,500 rupees per 10 grams to the 100,000 rupees per 10 grams range in H2 2025. ICICI Bank Global Markets said in its report. Gold prices, which have cooled in the past few days amid easing in global geopolitical and economic tensions following the Iran-Israel ceasefire and US-China trade deal, currently trade in the range of Rs 96,500 Rs 98,500 per 10 grams. The yellow metals prices in recently crossed the Rs1 Lakh mark in India before cooling down. Higher prices in India adversely affected the gold retail demand. In volume terms, gold imports have fallen on a sequential basis, showing that demand is weakening in response to elevated prices. Gold imports of 2.5 billion were recorded in May compared to 3.1 billion in the previous month. Investment demand was strong in May. Last month, brokerage house Quant Mutual Fund in its fact sheet for June 2025 had said gold has peaked out and might correct by 12.15 in the next 2 months. Data released by the AMFI showed a net ETF inflow of 2.92 billion rupees in May, after 2 consecutive months of outflows, highlighting the robust investment-related demand for the yellow metal in the local markets. On the global front, despite the sequential fall in gold prices, investment demand for the yellow metal remains strong, which is evident from ETF flows as well. The Spider ETF flows in gold increased from 930 tons as of June 1, 2025, to 948 tons as of July 1, 2025. At the same time, speculative net long positions rose by roughly 13k lots in the last month. In recent months, the gold bull run appears to have stalled as prices have been flat over the last month, reflecting an easing in safe haven demand that has taken place, even as they remain higher on a YTD basis in 2025 by 28%. A critical development was the ceasefire reached between Israel and Iran that improved risk sentiment and reduced demand for the yellow metal. At the same time, markets are positioning for the US government to agree on trade deals with other countries that will limit the need for reciprocal tariffs to be implemented, the report added. The US has already agreed deals with the UK and Vietnam, while there has been considerable progress made in negotiations with other countries such as Japan, India, and the EU. Besides, the US and China have agreed upon a framework for a trade deal as well that will be concluded presumably by August. Swipe left for next video. The upshot is that the easing in geopolitical tensions and expectations that Trade War 2.0 could ease in magnitude have worked to limit further sharp upside emerging in gold prices, the report added. The report further stated that investment-related demand has continued to drive gold prices as jeweler demand has witnessed softness. Latest blogs.